Hello to all traders and welcome back to the market review brought to you by Orbex. So I was looking at the indices today. The Dow has seemingly kept on pushing through its resistance area. However, the S&P and the Nasdaq seem to be hitting slight resistance in that particular area. So we've had quite a big uptrend on the indices for the last couple of months. It has been quite astonishing how much of this V-shaped recovery has not only been quite predictable, but it's played into the hands of a lot of bulls, a lot of bull territory traders as well that are obviously taking this opportunity and making the most of it. So let's just get straight into the charts. On the daily chart, we're looking at the Dow at the moment. So as I said, we've broken through this pretty much this particular resistance on the mid 35,000 area, and now we're just seeing if we can hold above 36,000. So this has come at a time when we haven't seen 36,000 being hit since the back end or the early part of 2022, so nearly a year high there. And if we do get this hold, then we could actually start pushing a little bit further, a few more 100 points to the upside. But let's just look at the main topic of focus at the moment. So we're just waiting to see if we're going to have this major correction now, and we'll be looking at the 35,600, 700 area will be quite a firm support at the moment for the indice. Not too much in the way of divergences on the RSI or MACDs. We're not just looking at these kind of signals. Most interestingly enough though, on the 4-hour chart, if we just bring this a little bit more into play, we are seeing this very sharp surge in price action. However, on the RSI, it shows a bit of a different picture where there is looking likely that there will be a bearish divergence happening in the near term. So we could see price action consolidate slightly and then start moving a bit lower. Whether or not we'll penetrate and break this particular support area that we saw the last swing high will remain to be seen. However, it is looking likely that we will have a slight downturn on the indices. So what is driving the indices? Well, we've had good corporate data in the last few months. This earnings season has been quite progressive. We're seeing that the Fed is slowing down on its rate hikes as well, possibly not having another one in its next meeting shortly, next week actually. So we're just waiting to see if that's going to have any big detrimental effect on the indices as well. So on the S&P, a little bit of a different picture, because whereas the Dow actually started moving higher from its last resistance break, from the S&P, as you can see here, we are seeing from the last swing high that we saw in the middle of July, we're seeing now slight hesitation in the markets, quite firm consolidation, and this very bearish candle that we saw in yesterday's trading has really started to set the tone now if the S&P is going to travel any further. So after having quite a choppy downturn, we saw quite a vast shoot to the upside, because we didn't really see many corrections like the downturn. As you can see, very choppy, kind of like a 5-wave impulse if we're looking at Elliott waves. But on the upside, as you can see here on the daily chart, very bullish momentum, buyers attracting more buyers in that sense. So we're just waiting to see now if that's going to have any impact on the next surge for the S&P. Not too much, as I said, a little bit like the Dow, not too many divergences on the RSI, but on the 4-hour chart, most interestingly enough, after completing this V-shaped recovery, as you can see on the RSI, we are now starting to move a bit lower. So a very nice bearish divergence coming in there. And we're just now waiting to see if we're going to have a bit more consolidation before a drop lower. But how many more points can it drop for the S&P? It has been very subdued in the last couple of trading sessions. So, well, compared to when we had this big influx of data coming in as well. So let me know what you think about the indices. Obviously, we've been talking about gold and the dollar for most of the week and last week, since it did hit record highs. So we're just having a little bit of a back seat now before we start looking at gold again, as we take you to the end of the week where we have the non-farm payroll data as well, which I'll be doing a live webinar on that. So feel free to join. Just all you have to do is register, and feel free to have a chat conversation with me as well on what the markets are, where the markets are going, what markets are you trading on, and where to look for as we head into 2024. So what a year it's been, and we'll see what's going to happen not only tomorrow but next year as well. So thank you very much for joining me, and we'll speak again next time. Bye for now.